After 4 days of marathon meetings, the world's largest oil exporters have agreed to cut output. They're trying to limit supply as business closures over the coronavirus outbreak restrict demand. Mexico had been the last holdout, refusing to bring down its production. But over the weekend, its government struck a deal with US President Donald Trump, paving the way for output curbs by OPEC members and other countries.
The United States has committed to additional cuts to what it was going to deliver as compensation for Mexico.
Major producers will collectively reduce oil production by 9.7 million barrels per day on current levels from May 1st until the end of June. That will be eased in July with a reduction of 7.7 million barrels per day from current levels until the end of this year. Supplies will then be kept lower than current levels by 5.8 million barrels per day through April 2022. Before the deal, Saudi Arabia and Russia had been flooding the market to maintain their dominance over supplies. Now they're hoping to drive international prices back up again.
We believe that this deal has prevented oil markets from falling into chaos. It now helps to keep prices at a stable level.
Yet oil prices fell on Monday. Analysts say demand has dropped by as much as 30 million barrels per day, a much sharper decrease than the reduction in supplies.
It averts the worst case scenario, whereby it prevents more cheap supplies from being flooded into global markets while putting a firmer floor beneath oil prices. But it's not the catalyst that we need to see to send oil prices just really soaring from here.
Some oil exporters like Mexico, Iraq, and Nigeria are desperately in need of higher oil revenues to prop up their economies. But the OPEC Plus deal means they will have to contend with lower earnings for a while longer. Mobin Nasir, TRT World.
Well, for more on this, Ellen Wald joins us now from Jacksonville, Florida. She's president of the energy market consultancy, Transversal Consulting, and author of the book Saudi Inc. Welcome back to the program, Ellen. Now, it seems that traders were a little underwhelmed by this deal because we didn't see prices rally as much as they could have or should have after the historic deal was announced. Why was that?
Well, I think that the really big issue here is the demand destruction of 30 million barrels per day, and even as you said, the largest cut in history from OPEC or OPEC Plus doesn't even begin to scratch the surface of that. It's barely 10 million barrels per day, and I know that that countries were very upset with how the market was taking that. You saw earlier today, the Saudi oil minister, Prince Abdulaziz, was on Bloomberg talking up the deal and saying that, you know, more is coming and these other countries are going to be announcing more cuts. But then you look at what is it that the United States is actually offering, and all it is natural declines or a forecast of natural declines, and it's not even clear how much that's actually going to contribute.
Yes, as you say, we're seeing this unprecedented collapse in global oil demand because people can't drive anywhere, nor can they fly anywhere. So what then should oil producers be doing at this time? Apart from cutting supply, which seems to only be scratching the surface, what more should be happening?
Yeah, that's the question on everyone's mind. What can anyone do? And other than cut their production down, there really isn't much. I mean, they could start potentially, advocating for the reopening of economies. They could perhaps try to divert those oil supplies to produce plastics or other things. But there really isn't a huge market for that either at this point. There really is nothing they can do other than shut in production or urge economies to get moving again.
We know countries like China and the US have taken advantage of these low prices to replenish their emergency reserves. But aside from that, are we facing a danger of perhaps the storage facilities around the world filling up as these countries continue to pump out crude?
And that's definitely an issue, and I think everyone's very, very focused on, exactly how much storage there is in the world and how quickly it will get filled up. I would urge people to remember that storage facilities can be built. China, in fact, builds them very, very quickly. So there isn't necessarily a finite amount of storage in the world because we can always build more. And as you mentioned, there are going to be a lot of purchases by various countries to fill up their SPRs. But one of the things that's being done in this deal is they like to count SPR purchases as cuts to production as opposed to on the demand side, which is what they are. So I would caution against looking at that as a supply cut and seeing it more as something on the demand side. So I do think that this is an issue, but we have to remember that people will find very creative ways to store oil.
And we've got poorer countries like Nigeria who are pretty much entirely dependent on oil production for their revenues. I mean, what sort of effect is this global collapse in demand having on countries like Nigeria?
And I think this is the big question that we really need to turn our attention to because since oil prices are low, are going to remain low for the foreseeable future, we need to look at the political consequences of this in places like Nigeria, but also in autocracies around the world. This is a serious issue. If governments can't increase their revenue, it's likely that we will see political unrest resulting from this.
Okay, Ellen Wald in Jacksonville, Florida. Thank you as always for your analysis.